Say it's February 1994 and you want to invest $1,000 in the stock market. You are interested in an investment that maximizes your returns. So, knowing what you know now, you would probably invest in a tech company like Apple, Microsoft, Amazon, or even Nvidia. After all, these are the world's largest companies by market cap. Investing in these companies would yield a great return, but there is a company that would give you even better returns. Monster Beverage Corporation, the beverage conglomerate, turns out to be the company with the best performing stock over the past 30 years. If you invested $1,000 in this stock in 1994, you would have over $2 million today, meaning that Monster's stock has grown by an astounding 200,000% since 1994. Apple, tech's best performing stock over the past 30 years, has only increased 60,000% over the same time period. So, how did an energy company beat out tech giants to become the best performing stock of the last 30 years? Behind the stock's monster rally is an impressive, consistent financial performance. In 2023, the company brought in a record revenue of $7.14 billion, with a net profit of $1.63 billion. What is even more impressive is that the company has seen a growing rate of revenue for the past 31 years. Monster Beverage Corporation operates like a holding company that owns and operates several beverage brands. Relentless, Bang, and Reign are some of the brands operated by the corporation. But Monster is the most important brand the corporation owns by far. Monster brand accounts for over 90% of the company's revenue. So what's behind this impressive financial growth? Well, the answer lies in a corporate strategy that focuses on customers, international growth, and an efficient distribution center. Monster's growth has been very slow and methodical, and it all starts with a Know Your Customers strategy. Red Bull is the dominant player in the energy drinks market. If you think of an energy drink, you probably think of Red Bull. Red Bull spends a lot of money on advertising, and Red Bull energy drinks are now sold everywhere – sporting events, bars, nightclubs, stores, etc. Red Bull has become so popular in the bar and nightclub scene that vodka Red Bull has become a common drink. To differentiate itself from Red Bull, Monster has taken a completely different approach. Monster products are not sold at bars and nightclubs. Instead, Monster has gone after a younger target audience and blue-collar workers, and they have tailored their strategy to best target this audience. For example, a Monster can is sold at the same price as a Red Bull one. However, the Monster can is twice as big in size as the Red Bull. Additionally, Monster does a great job in marketing. Instead of advertising their products on TV, billboards, and social media, the company uses sponsorships. They identify what events their core audience is watching and become sponsors of these events, which is why you might have seen Monster sponsoring monster truck races, bull riding events, and more. This ensures that Monster is visible to its core audience, increasing brand awareness and leading to growing sales. Another reason behind Monster's financial success is its rapid expansion internationally. Initially, Monster's international strategy hinged on exporting its successful American model to foreign markets. However, the company soon realized the importance of localization and began tailoring its products, marketing, and distribution strategies to suit the preferences and cultural nuances of various regions. In Europe, for instance, Monster has successfully catered to local tastes by introducing flavors and formulations that resonate with the regional palate. This approach has been mirrored in other markets, including Latin America and Asia, where the brand has adjusted its product offerings to align with local customer preferences. Asia, particularly China, has been a focal point for Monster's international ambitions. Recognizing the vast potential of the Chinese market, Monster has employed a nuanced strategy focused on urban centers and adapting its product to suit local tastes. For example, Monster introduced a lower carbonation level in its drinks to cater to the Chinese preference for non-carbonated beverages, a strategic move to differentiate itself from the dominant Thai Red Bull. And this is why when we look at Monster's international performance, we see this growing trend. Finally, Monster has optimized its distribution system to minimize cost and maximize efficiency. In 2014, Coca-Cola bought a 16.7% stake in Monster for $2.15 billion in cash. The stake has now grown to 20%. As part of this agreement, Coca-Cola transferred its energy drink business to Monster, while Monster transferred its non-energy business to Coca-Cola. This strategic move allowed both companies to focus on their strengths, Coca-Cola on soft drinks and Monster on energy drinks. But even more importantly, this investment paved the way for Monster to utilize Coca-Cola's international distribution network. As of today, Coca-Cola handles Monster's distribution in all these countries. Coca-Cola's vast global distribution network has been instrumental in expanding Monster's reach, enabling the energy drink giant to penetrate new markets and grow its international presence more effectively. Monster's co-CEOs, the two men responsible for this historic performance, are both in their 70s. Given their advanced age, investors expect these two men to step down from their managing roles, and it will be difficult for the company to replace both of them, considering their tremendous industry experience and sharp decision-making. Finally, energy drinks are increasingly under scrutiny, with several countries highly regulating the industry or outright banning these drinks. If these bans were to become more popular, it would hurt the company's performance and stock.